Welcome. Very excited that we've got a great program this afternoon, including William Noonan, Colin Daigle, and Melanie McDonald. I'm going to have them each introduce themselves for a moment, but this is actually, I would call it a bonus program in the sense that this is the 11th in what's been a 10-part series. Today's topic being SDI, Subcontractor Default Insurance, and the uncertainties of construction during COVID. I assure you this will be a lively discussion and a fun panel to deal with. I'm going to pass it around here and I'll start with you, Colin. Will you introduce yourself and give everybody sort of your brief background so everybody understands your perspective on this issue?
Sure. Thank you, Tracy. My background, I'm a managing director with Imperium Consulting. We focus on putting together claims, contractual and insurance claims, heavily focused in the construction sector as well as government contracts. And I've been involved with SDI claims for a good 16 or 17 years of my career, 27 years in the construction space, and part of that within a construction contractor, and then ultimately in consulting. So I've been around SDI claims for quite a while, and I know the topic today is about how they relate with COVID, and it's an interesting time, so I'm looking forward to talking with this panel more about it.
So Melanie, could you give yourself a brief introduction?
Yes, thanks, Tracy. I'm an attorney at Saxe, Doernberger, and Vita, SDV with Tracy. I joined the firm at the end of January out in the California office, our West Coast office. After practicing law for 30 plus years in Texas, I decided to have a change of pace, and I'm out in California now. And I've done I've done insurance coverage work for policyholders for most of my career. Worked a little bit as an insurance broker during that time as well. And for the past 10 years or so, most of my claims have been for construction related accidents or losses. And I'm going to talk about SDI from a coverage standpoint.
Thanks, Melanie. Bill?
Thanks, Tracy. I'm Bill Noonan. I'm a managing director with Alliant Construction Services Group. Alliant is a large construction broker. I have been on the broker side now for almost 5 years. Before that, I was on the large contractor side, and I too, like Colin, have about 18 years experience with both placing SDI and SDI claims, and I look forward to this discussion.
So I'm Tracy Saxe. I'm a partner with the firm of Saxe, Doernberger, Vita. We are a national insurance coverage firm representing policyholders exclusively. We have approximately 45 lawyers at present and continue to be growing. We are not exclusively for the construction field, but nearly 60% of our work is now associated in one way, shape, or form with insurance coverage for the construction industry. And so this is an issue today that is of great interest to us. I've had the pleasure to work with and know both Colin and Bill for a long time. I don't know, 15 years or so. I'm not even sure, but it's been quite a while. And we've had some enjoyable occasions to work together on a variety of different cases. So let's have Melanie start us off. Why don't you kind of work us in as the lawyer in the group here presenting what the basics are for SDI, kind of give us an introduction to the topic before we dig in on the COVID issues.
Sure, happy to. So I'm going to give you the nuts and bolts, see what I did there, of SDI insurance. Generally speaking, SDI insurance covers when a subcontractor defaults, and the insured is going to be the general contractor, and they're going to purchase this coverage to protect themselves against loss arising out of a subcontractor default. And I say generally speaking because unlike your general liability policy, which tends to be pretty standardized, each insurer in this market has a different form, and the words are different. And as a coverage attorney, I can tell you that the words of the insurance policy matter. Another document that's really important to the coverage analysis is the subcontract itself. And you're going to have the general contractor is going to have various subcontracts, and they're not all going to say the same thing, obviously. And it's those default provisions in the contract that are going to determine whether there's a breach or a default under the contract. And that in turn is going to inform the decision of whether your SDI policy has been triggered. Another provision that could be in the subcontract that is relevant to this discussion is a force majeure provision. It might be in a subcontract, there may not be, but there's a general question right now on these insurance coverage matters across all lines of coverage, whether the COVID pandemic is a force majeure under a contract. Again, not the insurance policy itself, but the subcontract.
To throw out there for a little discussion about what would be the impact of whether something is determined, whether COVID at a particular project was considered to be force majeure or not. Did you want to comment on that, Colin, before go to the next?
Sure. Yeah, I certainly can. I think of, I'll give the bottom line up front of, what I would say on this whole presentation. I think of SDI claims very much starting as contract claims. The policy indemnifies for the performance issues. And so that subcontract default follows the subcontract. And I think successful claims, successful in the terms of the recovery, as well as a carrier being able to understand and get comfortable with those costs, really need to separate all of the other factors that could relate to a default. And with COVID, certainly I hear force majeure thrown out there quite a bit, where contractors, general contractors, may be looking for time extensions, but not necessarily getting money. So I think it's just another mix of what could be a factor that impacted performance on a project. And so when I think of an SDI claim, it needs to be very clear line of sight about the subcontractor's lack of performance, performance is defined in the subcontract and separated from or not caused by a force majeure issue from COVID. And those are some of the challenges I think we're going to see. And so when I say the bottom line up front, it's understanding that SDI claims really follow the contract claim mentality, then the insurance claim. And what I would sort of bolt on to that is where we work with contractors, really trying to resolve those SDI claims or those default issues at the project level versus sort of there's a net with SDI. We have a default policy here. And the hardest claims to resolve are the ones that have been out there for years and they weren't resolved earlier in the project. So being able to understand that it is a subcontract default issue, a contract issue, and really trying to manage and mitigate that at the project level, I think are keys for success around SDI claims.
So Melanie, I'm just going back still to basics. So what would you say are the biggest concerns from a coverage standpoint about a subcontractor default policy under COVID-19?
Yeah, so every policy that I looked at, I think Bill's going to talk a bit about the different markets, but they all have a bodily injury exclusion. And the exclusion doesn't say it excludes default caused by bodily injury. It says it excludes loss caused by bodily injury, arising out of bodily injury. However, that's defined in the policy. So a concern here is, what if you have a scenario where you've got a subcontractor whose entire workforce gets the virus and they are therefore unable to perform and they're in default? Is that going to be excluded? And Colin and Bill can talk about whether they've seen that in real life happening, but I would hope that that's not the case, that as coverage attorneys, we're going to make the most narrow argument for that exclusion. Exclusions are always to be applied in a narrow fashion and coverage to be applied broadly. So we're going to argue that no, it doesn't exclude the whole default. It excludes loss that's particular to the bodily injury. So that's one of the things that concerns me about this coverage. And another thing is that all SDI policies have so they're triggered by something. It's a default, but how that is defined in the policy varies. And also, you've got to read, again, both the subcontract and what it says about default in your policy and what it says about default. And they may not match exactly. So you're going to have to figure out, do I have a default? If you've got a default, there's a very short notice window under these policies, anywhere from 30 days to 180 days. So you need to get your notice in or you don't have a claim at all. So those are the two things that concern me the most.
And Tracy, if you don't mind, can I chime in for a second?
Please, Bill. I was just about to ask you.
Yeah, I would just say, I mean, for the most part, all the SDI carriers and markets have been out front on this since the start of COVID. But what I would suggest to anyone who's an SDI insured is to make sure that you are in very routine communication with both your SDI broker and your SDI underwriter, and that they are up to date on the status of your company's condition, what the last 6 months have looked like, what you think the next 6 months to a year are going to look like, because SDI markets like to, just like surety companies, want to know how the general contractors they insure are doing. How is their overall business? But the other reason for that constant communication with the broker and the underwriter is to make sure that you're up to speed on anything they're publishing or writing regarding how they define default, notice periods, and anything. You have to be in constant communication to know those things. I would also say, obviously, I believe that the policy defines default. The subcontract defines default. Each state, though, has a different view usually on what is an improper termination. And one of the things we have to keep always in the front of our mind with SDI is that if later on a claim is determined to arise from an improper termination, then there is some policy language about returning funds back to the carrier. So what I'm trying to suggest is look at all situations with a devil's advocate. Is a subcontractor going to be able to raise any claims based on the current situation the world is in, that the termination was improper, and to make sure that you have belts and suspenders around any default termination.
I think that's an important point, Bill. If you went back 10, 15 years, but the reasons for defaults, when you think about it, the number one reason certainly 10, 15 years ago was insolvency. As time has moved forward, as the economy picked up in the last decade and construction got busier, manpower, workmanship, sort of getting the B or C team instead of the A team because there was so much work going on, became a driver of defaults. And so when we look at what that means in terms of how SDI claims have unfolded, where subcontractors were insolvent and perhaps out of business, there was no subrogation, or the carrier wasn't necessarily going after the claim it paid the insured.
And Colin, there's also no doubt that they were in default.
Right, no, of course, that's right. They're gone. But where the subcontractors are very much still around, and there's a default, and many times the subcontractor may not understand what an SDI policy means. It's not a forgiveness for them. There's an atonement, if you will, in that form of subrogation, and they're going to have their side of the story about that default. And so back to your point, Bill, about defining default and language and what the contract says, what the policy says, what the state law says, all of that needs to be airtight, because at least in today's environment, I'm seeing more of the subcontractors, and probably you all as well, that they're still in business and they're contesting some defaults. So that should be expected, but it wasn't like it was 10, 15 years ago, where fewer of the subcontractors were still in business and were defending themselves. So I think that's even more important right now.
The other thing I just want to add, Tracy, is I think the one thing that all of us who are speaking here today have in common is a lot of times our experience is that of somebody brought in, not right when the wheels start to come off, but sometimes when one or more of the wheels is already off. And the reason I bring that point up is to just stress to contractors that all meeting minutes, all communications between the subcontractor and the GC and their superintendent and their project manager, all of those things will eventually come out during the claim process. And sometimes the people who are involved before the wheels come off the cart are emotionally involved. It's their project. They're the ones being held to schedule and budget. And sometimes people use words they don't mean to use. Sometimes people say things they don't mean to use. And all I'm trying to stress here is every contractor that has an SDI policy should have a very formal default program inside their internal controls and their policies, so that somebody at an officer level, whenever anyone is even thinking that there is the possibility of a default, is brought in, so that, you know, everybody is looking at it, and so that no one inadvertently gets mad and sends something that sounds like a default but really isn't. But the best way to deal with that is to keep the ability to actually default and terminate a sub to a very controlled group of senior leadership people. And that might sound very practical, but I'm just throwing it out there.
I think that's a great tip to walk away from today, is that idea. So obviously we're talking about different issues about when there is a default, and I think that, you know, if I understand Colin's point, is when it was financial insolvency, default was obvious, but when it's quality and it's manpower and other things, it may be debatable and argued later on whether in fact the subcontractor was or was not in default under the circumstances. Add to that the brief discussion we had about force majeure. I assume that somebody might be able to argue saying, no, the only reason we weren't performing was force majeure, and therefore we were not in default, even though we weren't working, which might put you somewhere between having work getting done and not being able to collect your SDI policy. Now, having said all that, I guess the question I'm going to throw back to Melanie is, the policy language, is it uniform from company to company? Is there a variety of companies out there offering this product? Give us sort of a, you know, 50 to 35,000 foot view of that issue.
Sure. There are currently 7 companies writing this. Zurich was the first and the only for, I think, more than a decade. And 10 years later, another insurer came along, and then now we're up to 7. Liberty Mutual is the newest insurer that's joined, and that was just earlier this year. And no, the policies are not uniform. So again, if there, this is kind of dovetails with Bill's point that you kind of need to have a plan in advance. You need to have a limited number of people who can declare a default, and you need to know what which of your subcontracts are covered subcontracts under your policy. That is a defined term. So back to Insurance 101, insurance is going to have an insuring agreement. It's going to have exclusions. It's going to have definitions. And it's going to have conditions. And all of these terms are defined. Covered subcontract, I believe, is pretty uniform. I mean, the term is uniform. How they define it varies. Some insurers are going to cover subcontractors that are supplying but not actually doing work. Others are going to exclude those contractors. Some policies are going to have a monetary cap on the value of the contract cannot exceed X dollars to be a covered subcontract. Bill, if he's your broker, can work with and probably get that endorsed and changed. But I'm talking about the basic policy form is going to have, in some cases, a monetary limit. And also, they might have a limit on how long the subcontract is going to take to be performed, to get to substantial performance or substantial completion, sorry. It might be 24 months, it might be 36 months. So you need to know which of my contracts are covered under my SDI policy And what do those contracts say about default or breach of contract? And what does my insurance policy say about default or breach of contract? Because those, and what is my notice provision? Is it 30 days? Is it 180 days? Is it something in between? So all of those things I think require pre-planning, because as someone mentioned, I think it was Bill, we do get brought in a lot of times after the wheels are off. And sometimes if you've got a 30-day notice period, the wheels are off in 30 days, and we're brought in too late to do anything about it. So you need to know in advance. If you've got this coverage, you need to know in advance what do your contracts say and what does your policy say.
And Tracy, just to add on to one thing you said, because yes, I've been part of some small SDI claims, but for the most part, I've been involved in a lot of very large, complex SDI claims that might even involve other lines of coverage, from some view or another. And I want to make sure that my comment is not made to be anti-attorney. It's actually meant to be pro-attorney. But in my life, I basically work every day with three kinds of attorneys involved in the construction world for me. And I put them in three buckets: contract, coverage, and defense. And then defense has some sub buckets because some are professional defense, some are good at construction defects, some are bodily injury, but basically those three buckets. And for a large SDI claim, to the point you made about the subcontract and force majeure, and then the point about comparing the policy to the subcontract to the situation that's going on, you know, in my experience, and I'm not saying that there's no attorneys who are capable of doing both or all three. I'm not saying that. It's just my experience that in a complex situation like that, you need an attorney in that state who knows contract law inside and out. And that's what they do for their primary business, is they handle contracts between owners and general contractors and subcontractors. You need their view of the default based on the contract language. And you might also, and probably on a large one, do need your broker, and you might also want coverage counsel, who all they do every day is not look at contracts, but rather deal with insurance coverage issues. And sometimes I think we throw out the term attorney or defense, and you know, in situations like this, you need experts.
Right. Well, you don't have your dermatologist do your surgery for cancer, right? But maybe that's a bad example. Maybe they do something. But back to your point, I don't think that is pro-attorney in the sense that there's a recognition that this is specialty work of all sorts. We are working hand in glove from our perspective. We're only coverage lawyers. We don't try to be construction lawyers. We don't try to be defense counsel. We don't try to be any of those things. In fact, in most of our cases as a coverage lawyer, we have to be careful that we're not in those roles, because many times to prove our case, they may be witnesses in our case. I don't want to, that's even more common in other lines of coverage, but I could see that happening here as well, where there was some resolution by the contract lawyer, the construction contract lawyer, about the default. And now it's an issue of whether or not it qualifies under the SDI policy. And they may be the best witness on that issue. And it'd be very difficult for them to be both witness and lawyer at the same time. Now, I'm going to go back to you, Colin. I think you were going to say something earlier.
Yeah, no, I'm still getting the visual of Bill putting attorneys in buckets out of my head here.
Yeah, so we could add maybe in the post-production, we can show pictures of attorneys in buckets.
I'm just seeing him line them up and point, you in this bucket, you in this bucket. But Bill and Melanie make a good point about really it's this area between how risk management works, project management, legal. And as the claims consultant, as the forensic accountant, the forensic scheduler, we're coming in after the claim has happened, as Bill noted, typically where there's some complexity to it, Melanie as well. And, you know, there are some things that need to be navigated just from how coverage works and contract works. even the language around some of the costs in the claim. In a contractual sense, there are direct damages and consequential damages in a contract claim. And then they can be drilled down from there. Within SDI policies, they'll break them out between definitions of loss that range from talking about subcontractor obligations, maybe professional fees, defective work, indirect costs, which have different definitions. So those things need to be mapped out and understood at the project level, where there's a initial, what are our costs here, as well as working with risk management. And then from that process, where there are complex issues, be it contract or insurance, bringing in outside counsel or other advisors to help navigate that. But I've seen that to be some of the most important aspects of a claim recovery strategy that need to get worked out before they can get done.
Well, so Colin, you just mentioned direct and indirect costs, which is always an issue, even without COVID. Maybe just let's dig in a little bit and talk about what type of things might be a little different with a COVID situation, whether COVID is the cause of the default or just has an effect on the cover cost, the repair cost.
Yeah. So COVID as a cause, again, I like to really simplify things when I try to understand a default, and I'm thinking of a contractor. But with a subcontractor, think of subcontractors, they're trades. They're doing specific elements of the project. They're pouring concrete, they're framing wood panels, erecting steel. And so their performance will be described both in the scope of what they're doing and the time from a schedule standpoint. And typically there's discussions of manpower and other aspects. So if they're not performing or they're not making payments to their laborers, those issues can be investigated. Where COVID comes in, if COVID was the reason that caused the deficient performance, that's going to create some complexity and versus some other factor. And I don't think that we know enough about COVID yet to how that's going to mix into both contractual claims and SDI claims and even builder's risk claims. But I think the advice would be just to make sure that there's a very clear understanding with respect to a subcontractor default, what the default of performance was. And then certainly the notices and documentation, including allowing the sub the time to cure and documenting whether they did or didn't. All of that's going to be really important. With respect to direct and indirect, from a contractual standpoint, direct costs, pretty much everything involved with building the project. Indirect costs are more maybe corporate overhead or even some financing costs. But within SDI policies, the definitions vary. And I'm going to reserve, I know the definitions, I don't want to take a position on it, but generally indirect costs do involve some time element. What can be the issue with indirect costs in some of these definitions of loss are whether those costs become a subcontractor obligation first as a result of the default. And so that other definition doesn't apply. That's illegal.
Colin, could you give an example of that when you say they become a cost of the subcontractor itself? Just explain what you mean, maybe with the.
Right, and I want to clarify, this is, the lawyers need to make these arguments. I look at it from a claim prep standpoint that if there's subcontract language that holds a sub accountable for costs of its default, right, and those costs could involve costs that could be defined as indirect, but because they are an obligation of that subcontractor because it defaulted, there's an argument in an SDI policy that it's a subcontractor obligation. And a lot of times that language is written, indirects are, a couple of the types of costs are named, but it also says if it's not in the definition of loss above here. And so if that first definition of loss is some aspect of the subcontractor's obligation, and there's subcontract language that says, if you default, you're responsible for these costs that you create. Well, then those costs become, by many definitions or interpretations, a direct cost. So there's debate about that. I get involved from the standpoint of trying to quantify that and understand that and shed light on it. And some of the ways we do that, again, and these are things general contractors and even subcontractors should think about. When you look at the nature of the cost, I would split it this way. I would say at least understand if it's a general condition cost, a true time element cost, and then understand if it's a trade cost, if it's scope work, if it's activity related. It's the increased cost of construction versus a time element. That understanding, along with some interpretation or understanding of the subcontract language, that's the path to help resolve any coverage concerns or disputes, I would say.
And I'd like to add on to that, and with Bill's bucket analogy, what Colin does and what we do too as coverage attorneys is you have to look at the language of the policy. So some of these policies have defined loss in one way, they're all different, and some talk about direct costs and indirect costs. And so you have to figure out what is this cost and which bucket does it go into? And that's what Colin does, aided by the language of the policy. What most of these policies cover is the loss that that the general contractor incurs to complete the subcontract of the defaulting. They can do it themselves. They can hire another contractor, and so you've had a default. They've incurred costs. They've had to pay an additional subcontractor to come in and complete that work, and now they're making a claim under the SDI policy. And so where do all these costs go? And one of the costs that might be different now under COVID that wasn't bid in the first place is PPE, and the time it may take longer to complete the work because of social distancing requirements on the job site. So these are additional costs that should be picked up as the cost to complete the contract, even though it wasn't originally contemplated. It is a cost to complete the contract. Some of these policies are going to put a cap on that. So one carrier says the loss cannot exceed double the subcontract amount. So again, the words of the policy are going to determine how much coverage you get. But again, we're going to have to put the cost into the different buckets, and there are going to be some different costs than what we would traditionally see because of COVID.
Right. One point to build on, Melanie, is something to really think about when you have this indirect cost issue. And with COVID, I agree with you that some of the social distancing and other really manpower issues, access to site, so you could expect to see lower productivity out in construction, taking longer to build it, but it could also just cost more. And so the thing I would look at and recommend contractors to look at would be the difference between delay and disruption. And there is a difference. Delay, strictly the time element of being out there longer, and in the purest sense, the cost of being out there longer, where the time is driving it. Disruption does not require a delay. You can have disruption and no delay. And it's the increased cost to that direct work. And it can be caused by a number of factors. Social distancing or some disruptive effect from it could be one of those. And then look at your indirect coverage. And my view is that the disruption is very much a direct cost. And for the policy forms are all different, but I don't see that automatically as indirect for sure. Where things become delay, you see that indirect conversation a lot more. Again, I'll footnote, unless it's an obligation under the subcontract, and there's an argument being made there. But the delay versus disruption, I think, is going to be a topic. Certainly, if there are defaults or completion costs of replacement subcontractors in COVID in this period now, where social distancing or other disruptive effects are increasing the cost of construction.
Because I think one of the things we all know is that in these large SDI claims, when in a large SDI claim, it is usually what we call a critical path subcontractor. And when an SDI claim comes from a critical path subcontractor, that means any other subcontractors that its work is synchronized with, their schedule will be affected. And that's work that was probably right now all bid pre-COVID. Their original contracts were awarded, pre-COVID. And we know that replacement contracts or overtime contracts are all T&M. So it's, you know, it goes back to practical things. Creating a new job code to track certain costs is a lot easier when you do it from the start than trying to do it when you bring people in later on. But when I look at contractors whose work is going to be disrupted or delayed because another contractor's did default, what is it, like a normal time, or is it worse because it's during COVID and the things that, you know, Melanie and Colin already talked about, social distancing, PPE, a whole bunch of other things. So I think there's a lot of things we have to consider here.
Yeah.
I want to ask a question to Colin. It seems to me that to a large extent, when we've worked together, whether it be on builder's risk, SDI, or any other type of claim that we've used your team as a forensic group, it's often about how you bucket and how you characterize the claim, not just how you're getting all the numbers right. And it seems to me that there's a couple of traps that are easy to fall into here of defining things in such a way that it makes it easy to call it indirect, when it really is, as Melanie pointed out, simply the cost of repair in a more expensive time frame and a more expensive work environment because of COVID. What's your thoughts on that?
Yeah, I think there are some traps. You know, again, it's getting that understanding of what the nature of that cost really is, in terms of, was it a general conditions cost? And if it was, is the cost incurred simply by the extension of time out there? Or is that a general conditions cost that was increased because of the default in performance? Meaning, if you had supervision that had to be increased to deal with the defaulted work, that's directly tied to the activity of the defaulted work. And I would not call that time related. Those are the positions to put forward for the carriers to consider. The real challenge is making sure that you can prove that or document that or show that. And those are some things that need to be thought about during the project, right after the default. Certainly, you know, project control, setting up different cost tracking mechanisms for sure. The other aspect is really that schedule aspect, where there is a delay, having a schedule analysis done or schedules updated, baseline schedules updated, you know, at least every 2 weeks, depending on the size of a project. But being able to demonstrate that delay where, and some of these policies are different around indirect, but where indirect costs are tied to that analysis of delay, I think the way insureds look at that is you have to prove the cost, and ideally you can prove 100% of it, but maybe not all. And then you have to prove the dates. And if you don't prove all of that, that's another measure that will lower your recovery. So making sure that you're understanding the nature of those costs, specifically around general conditions, and separating things that are activity driven to the defaulted scope, and then understanding the forensic delay and being able to demonstrate those days to the extent those days are necessary to quantify the cost. Those are very important for successful and non-confrontational expedient subguard claim, SDI claim processes.
All right, so I think we've had a lively discussion that sort of circled around a lot of the issues that are associated with either the initial coverage that you're going to get from a default under an SDI policy and the effect of COVID-19 on that, and also the fact that the documentation of the claim and how we characterize the claim is going to be important in determining whether or not you're going to have coverage. And of course, with the comments previously made, that each of these policies is unique. Each of these policies has its own way of defining certain key terms. And I really appreciate Bill's comment earlier, the idea that people tend to jump in and you've got this combination of a builder's risk and an SDI and other, and maybe GL claims that are all going on at the same time. And you got project people who aren't necessarily familiar with all the insurance terms, who are shooting off emails to the subcontractors, to each other, all of which the insurance company gets this wonderful feast to cherry pick from as to which parts of it hurt you in trying to present your claim. So having a protocol and sort of a core group that is is going to handle this, and some discipline around saying things that are only accurate and only things that need to be said would be helpful in when we come in as lawyers trying to find you coverage. So that's kind of my, the takeaway from everything that's been said here, which I think has been a wonderful discussion. I want to give each of you a chance to sort of sum up and before we close out the program. Melanie, do you want to give us a start to do that?
Sure. I mean, I think I'm repeating myself, but that's okay. The takeaways from my standpoint are: know what your subcontracts say, which subcontractor is going to be covered by your SDI policy, what's a default under your subcontract, and what's a default under your policy, and what is your notice provision. Know those things in advance so that if you get into a situation that looks like a duck, quacks like a duck, but it still may not be a duck. You need to know in advance, have that lined up, have that person in advance, who is going to declare that there's a default or give the notice to cure. Be proactive. Don't wait until it happens.
Colin, thoughts?
I echo what Melanie said. And, I think about it, what's the bigger picture? You're trying to get a project done. If you're a general contractor and you have SDI and you have a default, that remains the goal, finishing the job and minimizing that financial exposure. And I'd suggest just that communication with the carrier, its consultants, your broker, lawyers, that's all helpful. And being able to really understand the issues, be reasonable about those. If you have a strong case or position on the cost, put that forward. And also, if you don't, be reasonable about whether it is a cost that should belong in the claim. But the goal is to get the job done, make good decisions about that, understand your coverage, manage and document your loss. And I think you're going to be in good shape.
Bill?
I guess three things I would say is this. Number one, if you haven't read your SDI policy in a while, it's a really good time right now. And send it to your general counsel or your coverage counsel. But take a good read and talk to your broker. If your renewal is coming up, make sure that you've been talking to your broker about, are there any changes coming and any new policies that are going to affect you going forward? Are any of them related to COVID? The other thing I just want to say is about, we talked about people who work on projects. I have great respect for the women and men who every day at 5 a.m. are going to a trailer, starting up a computer, running hundreds of subcontractor people working. And sometimes when problems occur, the last thing they need is somebody else asking them to stop their day job so that we can put together an SDI claim. I mean, it comes off so condescending sometimes. Is that we all can do a better job of getting the right help and the right resources to those people, so that we can run the default almost like a separate job so that they can do their daytime job. And the last thing I just want to talk about is contractor qualification. Most companies do annual or every other year, most annual. But I would tell you, based on what I see right outside in the economy and the contractor business, is that you can't depend on a pre-qualification that was done a year ago that hasn't been redone in the last 6 months. You need to know your subcontractor's cash and liquidity position currently, so that can they continue to do the work they're doing while they're looking for new work. So thank you for the opportunity to be here today.
Well, thank you all. I'm just going to say maybe the final word here is that I really appreciate Bill saying everybody involved in the claims handling who's actually a project team member, they were full-time busy before this claim needed to be handled. So assembling your team early, and that claims team that includes the project management folks, but also includes accounting, risk management, your outside broker, your forensic consultants, and your outside coverage counsel as necessary, and getting them in early is going to make this claim go smoother right from the beginning. And in fact, I would suggest this, that don't wait for a claim to happen. Know who the team is going to be that you need and have them already lined up so that when you need them, they're ready to go. And also using the same team over and over again is a big advantage. They know your business and they can move a lot quicker. So thank you all for listening. Thank you, Melanie and Colin and Bill. Really appreciated the good discussion.